Good evening, everyone, and welcome to yet another webinar from Chart Advice. Our webinar today is focusing on the concept of volatility, and myself, Raja Venkatraman here. I'll be explaining to you the concept of how volatility affects the market and how we should look at it. And definitely at the end of this webinar, you will be having a takeaway where you will be able to know about how the technical analysis, one of the technical analysis tools, which I'll be discussing as part of this webinar, and how you can handle the market volatility and how you'll be able to find out opportunities. So that is what is the program all about. And going back, say around 10 to 11 years ago, when I had finished my MCA, I was also very much interested into the markets. And as I started investigating into the market, that's when I realized that technical analysis is a very profound subject and also very, very interesting, because it gives you a concept about the market, and also at the same time it tells you how you think about the market at various points of time, the way you think between market hours and the way you think post market. And that's what led me into a seminar which was conducted by Dr. Narayan. It was he was giving a talk on technical analysis, and I happened to be there, and that's where I got to know that technical analysis is much more than what we actually perceive. And there Dr. Narayan mentioned that technical analysis is the language of the markets, and that's what got me into this subject. And over a period of time, I associated with him, and I got an opportunity, because I had my MCA background. I got an opportunity. Are you able to hear me? Some people are mentioning about the voice factor. Can everyone give me a heads up about the voice? Is the audio video okay? Okay, I'm getting a heads up. Yeah, fine. Thanks, Sachin. So as I got involved with Dr. Narayan, that's when I realized that market's a very fascinating world, and he gave me an opportunity to develop the website of Chart Advice. And as I developed the website of Chart Advice, it gave me immense opportunity to interact with our mentor, Dr. Narayan, and get to know the market better. And as the years progressed, I started getting more and more attracted to this fascinating subject. And the whole concept of technical analysis became much more clearer to me. It so happened one day, one of the analysts was not available, and I was given an opportunity to assist the analyst team in giving out some calls. And because of that opportunity, I was able to interact with the analyst at a much closer level. As I started assisting them in delivering the calls, because I was from the technology background, and I was asked to assist them to ensure that the proper delivery of the calls were happening, because there was some issue, and I realized that I was able to communicate in a much better manner, and I was able to assist them. As a result, what happened was my affinity towards the subject went up quite a bit. Over the years, I have graduated from an IT space to a technical analyst. And over the last few years, I have been able to assimilate a lot of information from our mentor, Dr. Narayan, and he has made us realize that technical analysis is one of the most easiest way to interpret the market conditions. This is what we promote, and this is what we are able to share with people like you. Today, there are so many people who are interested in the markets, and today in our webinar also. Many people have come, even though it's a weekday. You all have made it to this webinar. Thank you for coming down. So why why we have so much respect for Dr. Narayan? Because he's been there in this market for more than 40 years. And in these 40 years, he has seen the entire paradigm of the technical analysis subject. He has seen how the market has progressed from the jobbing days to the current scenario where algo trading is becoming the norm. However, his hard work did not go unnoticed, and he received the lifetime achievement in technical analysis. For those who are not aware of Dr. Narayan has been there in this market for more than 40 years, and he has been CEO of ICICI Securities. He has headed the derivative desk. He has been with In Time Securities, and then he moved on to start off on his own venture. And we at Chart Advice are privileged and honored to be continuously mentored by him, because he believes that technical analysis is not just about predicting the right or wrong, or where the price is going to head up or down. Eventually, one needs to make money at the end of the day, because if you want to be a profitable trader, then you should not be looking at the end of the day or at the end of the week. You need to see that you are able to generate positive expectancy week after week and year after year, because trading is a very serious business. And Dr. Narayan has ensured that we at Chart Advice are able to inculcate this behavior, imbibe this particular aspect of the technical analysis subject, imbibe this aspect of this market, because markets are not the same every day. So our learnings are imbibed in us in such a manner that we are able to assist our subscribers, our participants, be it anyone, they get complete clarity on the subject from us. So that's why we have so many clients with us. You can see here from the rostrum of the clients whom I'm showing right now. They are all the clients who have found that Chart Advice is able to deliver value to them. And at the end of the day, they become our repeated clients, because they find that we are able to generate some response for their end clients, and we are able to take care of them and also channelize their efforts in a much better manner. And we have done various kinds of training programs, be it corporate training, be it retail training for all these corporates. And we have also given a lot of value additions to their end clients as well. Okay, moving on to today's market, we can see that there is always a bit of chaos. And as the volatility has increased over the years, one cannot look only at the domestic cues. So you can see here how generally the market functions. One actually starts off calling a broker. You get typically a call from your RM who says that this is a stock which could really excel. But then what someone hears is really excel, and then the whole thing, the euphoria migrates into a sell. And that's how the whole chaos builds up. And when the chaos reaches such an extreme, like how when market was at 9,700, it was at an extreme, right? That's what happened. People said that I could not take it anymore, and they said goodbye. And this goodbye eventually results into a buy. So this is how generally the market really works. But then even through this chaos, you could always be able to differentiate once you are aware and are enabled by certain knowledge. And in this aspect, technical analysis plays a very important role, because technical analysis will assist, be it you are either a part-timer, either you are a fresher or an experienced guy. All of you will be able to benefit from technical analysis, because technical analysis is the language of the market. Today, no company is going to call you in advance and give you important proprietary information. But these are actually reflection of the emotions of the people. What you can see on this particular image are emotions, and these emotions get reflected on the price. And this price is what is getting captured. And through technical analysis, one is able to understand the emotions which are at play and translate them into opportunities. Like they say, success is success meets the prepared. So those who are prepared will always be successful. Today's traders, how many of you have heard 80 to 90% of the traders lose money? Can I have some comments? Guys, I want this to be an interactive webinar because this webinar is to give you an information about the concept of the market and also give you an understanding of a tool. So if you are interactive, I'll be able to share more information with you, because at the end of the day, I want you all to benefit some takeaway from this webinar. All right, some people have answered. Well, around 80 to 90% of the people are not able to make money from the market, and because they are not able to generate some positive expectancy, and they are not prepared to handle such markets. And why is that so? And that is because everyone has certain expectations from the market, and so did I when I came here around 10 years back, when I thought that market is a straight road, and the moment you have a stop loss and a target, the only thing that the price has to do is go and meet the target. But then little do we realize that markets are not this way, and there are going to be continuous fluctuations. It's either going to be up, it's going to be down. Like they say, markets is a roller coaster. So those who are not fastening their seat belts, they are going to fly off. And that's what happened with me at the start of my journey in the market. But then my brush with technical analysis has brought me this far, and I hope to carry it on further. So once you realize that market is not what you expect, then what exactly is the market? Market is nothing but a vibrating piece of mechanism which we need to understand on a daily basis. You can see here that market is continuously vibrating. It's generating some positive energy on one day, it's generating some negative energy on one day, but the truth is that it is never still. So how do you handle such a situation? You can handle such a situation only if you accept that market is not going to be this way. However, very few people are able to understand, and that's why we are experiencing a very different kind of a journey. Our journey are never in a straight manner, and we end up having a roller coaster ride, and eventually our profits are always shaky. Having said that, let's understand why we face such a situation and what exactly is our problem. Our problem lies in the gap which exists between perception and reality. When you talk about perception, let's assume we are expecting a 15% return from the market, and we go into the market and start investing. So this is what we expect, that I start off with 1 lakh, and over the period of 5 years, my money doubles. This is what is our expectation. But we all know that what we expect is not what we get. Like a wise man has said, a man never gets what he desires. He always gets what he deserves. So what you get from the market is actually this. And why it so happen is because the market is a mechanism which is having lots of cycles. Lots of cycles are in play. So sometimes you have a great run, and sometimes you have a negative run. So eventually you are generating a negative return if you are held out for a period of 5 years, which is the ideal holding period for any normal asset class. However, if you had some patience, and if you had waited, say, for a longer period of time, what I'm discussing here is the benefits of holding on to the markets for a longer period of time. When I started in 2006, market was trading around 6,000, and now it's trading almost around 10,000. So what it goes to say is that patience will pay, but then are you ready to be patient? That's the whole key. And that's what it boils down to when you come to the market. Are you ready to be patient? And if you are an investor, you need to hold out for the longer term. And today, whoever held out, say for example, even when Modi formed the government, if you had held out, you would have made around 2,500 points just on the Nifty. So what it goes down to say is that markets, even in those 3 years, markets had its own gyration, but what it did was it went all the way up. So the moot point here is, if you had held out in the same portfolio, 1 lakh, you would have eventually made a 15%. But then at the end of the day, it boils down to how much are you willing to wait. And that's why the gap always exists between perception and reality. And that's why most of the people say that markets में पैसा नहीं बनता है. Markets में पैसा तब बनेगा जब आपको विश्वास होगा. विश्वास रहने से ही मार्केट में पैसा बनेगा. विश्वास on yourself first, विश्वास on the market, and विश्वास on whatever you are investing in. That's how you will be able to ride the trend. And moving down to a translation of whatever you saw, I'm translating it into an equity curve. एक ग्राफिकल रिप्रेजेंटेशन अगर मैं करूं जो स्टैटिस्टिक्स फिगर को, तो आपको ये दिखेगा यहाँ पे कि मैंने एक इक्विटी कर्व बनाया है. जो ग्रीन कलर का इक्विटी कर्व है, दैट इज योर एंटिसिपेटेड लाइन, जो हम चाहते हैं, बट वास्तव में जो हम चाहते हैं वो नहीं होता है. यू कैन सी हियर दैट दिस पर्टिकुलर लाइन इज द रियलिटी वन, which actually is starting off on a slow wicket and it is trying to go up, but yes, it is struggling, and eventually it goes and meets the upper line. And now if you look at the other blue line, you can see here you can see this blue line. It starts off well, and then it eventually dips back, and then again it manages to go up. So what is this equity curve trying to say? मार्केट में जब मंदी आती है या when there is a sideways phase, it is important that you are able to survive it. Howard Marks, a very well-known author, he has said that during investment it is important to survive such phases. अगर आप ऐसे volatile phases या range bound phases आप survive करोगे, तो आपकी इन्वेस्टमेंट दुगनी होने की चांसेस ज्यादा है. So the moot point here is that you should always be able to bide out time. If you are able to hold out longer, you will be able to benefit from participation in the market. Trading is a very, very serious business, and for those who are interested to know more about this trading, I'm using the word trading, but it also means investing. If you want to know more about it, you can read a book by Joe Ross. He tells you that markets are a very, very serious place, and for those who are interested to participate, they should be ready to absorb this gyration. If you are not able to accept the volatility, then there is no point being in the market. So it's best that you invest in other opportunities. However, markets are the most rewarding asset classes, and making money from the market is quite possible. For those who think that markets is gamble, please rethink. It's not so. Now, going back to the presentation, you can see here I have tried to represent to you the reality of stock market returns. The green line, वापस वही कह रहा हूं, it is a dream, and that dream will never be achieved. What will you achieve is this particular jagged line, जो ऊपर नीचे जा रही है. हमारा पोर्टफोलियो का वैल्यू इसी तरह चलेगा. आप ब्लू देखेंगे तो ब्लू इज स्टार्टिंग वेल, एंड देन इट गोज डाउन इनटू नेगेटिव, एंड नेगेटिव से वापस towards a very high percentage, and then eventually ending at 15%. The red one also in the similar manner. So what this is trying to say is that volatility is going to exist, and what we are talking about when we are mentioning volatility, it is the volatility of portfolio returns. And this is not a volatility of your intraday volatility, or for if some option players are out there, it is not about your implied volatility. It is about the volatility of returns which one has to accept. If one is unable to come to terms with the volatility, then it becomes very difficult, because as of Friday, we all were bullish. Then what happened today? A gap down, and market started cascading. And towards the end, everyone closed their position. And why so? Because of macroeconomic data. While fundamental analysis is very important, because fundamentals are critical. Without fundamentals, the markets won't work. What I'm saying is, fundamentals are important. They should be absorbed into analysis of the prices. If you do that, you will be able to give a better judgment. You will be able to get a better judgment. You will be able to analyze your opportunities in a much better manner. And at the end of the day, you will profit from your participation. What is it that you require? You require to be profiting more number of times than you make loss. Because if you think that by doing technical analysis you will be making profits all the time, I'm sorry, it's not so. There is no holy grail here. All this requires adequate discipline, and that's what we have been continuously trained by Dr. Narayan, and that's what he continuously stresses us, that technical analysis will help you make money. It's the only legal way to make lots of money. It's the only legal way to make lots of money. You can go long, you can go short, you can do an arbitrage, you can do everything. And technical analysis gives you that power. It helps you spot opportunities. But you need to realize that it is possible only through some diligent work. It's possible only when you are having a structured approach. And all this is possible and available at very few places. So you need to find places who will help you go along this route. And this volatility which is present in the market has caused some problems for the investors. And let's look at some problems which normal investors face. There are some freshers who are attending today's program, or even the part-time participants. You will see that as soon as you are interested to the markets, like how I was, you do the first thing is you go in and open an account, right? You go and open an account, online account, and if you are aware of even some stock, the first thing you want to do is go and buy, right? You are wanting to jump into a well without even knowing the depth of the well. So what will be the result? If the well is too shallow, you will hit your head, or if the well is too deep, you will end up sinking. So the first thing what you have to do is to first learn to swim. But then people are interested to make money, and that's what drives them towards this. And those who had gone long on Friday would be in this situation, wondering what to do. And today they would have exited all their trades. Of course, it goes without saying, at a loss. But then, why does these kind of things happen? These kind of things happen because you over leverage. Around 3 months back, if I told you to buy Max Financial, where would you have bought it? I didn't answer that, right? You would have bought it in cash, of course. But now if I tell you to buy Max Financial, you'd want to do a bravado. You'd want to go there and buy it in futures and make some quick buck. Do you think it will be helpful for you to just think over and see what kind of action you can take? Because market normally doesn't reward you if you are able to take such action. It's best that you are able to participate on a much calmer manner instead of jumping at every opportunity looking for money. But then our problem is our greed, and we end up blaming the market. Fault lies with us, but then you think that the market is not able to give you money, or market does not want to give you money. मैंने stop loss लगाया और मेरा ही stop loss लेके गया. मेरे markets के time में, like for example today, if you had kept a stop loss, your stop loss would have been as of Friday. But then today in the gap down, probably your trade would have opened below your stop loss. And in that case, what would you do? We all feel that stop loss is for the other man, correct? But then you should rethink on that line. We always feel that all important things, all regulations are for the other man. You are a saint. But then you should realize that such things market doesn't forgive. Market is a mercenary. It's like ISIS, you can say. It doesn't spare anyone. Those who don't follow the rules pay the price. And that's why it's very important that you have a regimen in place. A regimen will help you ensure that you are able to participate in the market day after day, year after year, and generate capital, positive, and ensure that you are able to participate in the market at all time. And today you all are here. Why, so may I ask? Because you want to learn and you have realized the importance of valuing your time of spending in the market. Because an intraday trader knows that he has only time between 9:15 and 3:30. So he needs to have a plan. An investor is much more relaxed, but then it's just a change in the time frame. Mentally, he still has to be accustomed to observing the news, because India no longer is getting affected only by its domestic cues. Geopolitical tension, what's happening in the ECB, what is happening in the Asian countries, all these things impact. And why is that so? Thanks to Mr. Modi. Mr. Modi has invited all the foreign participants and all the FIIs and is opening up practically every sector to FII. So at this rate, it's all going to happen. But then don't worry. You have a fascinating subject called technical analysis, which will always help you. But then it's like you need to rewind yourself. Like you need to be more, apart from this diligent part which I showed you, you need to concentrate on learning, because market is a depth. It's like an ocean which has opportunities. But then these opportunities are not going to be visible so easily on the surface. You need to go inside. You need to go inside the ocean to find the pearls. Similarly, you need to understand that market has got a lot of opportunities, and you need to go to some trained people. You need to address some aspects of your own, improve your understanding about the market, improve your capability, and then go and approach the market. Well informed is well prepared, because like they say, forewarned is forearmed. You will always be forewarned that there is something going to happen. And that's what today we had opportunities on both the sides, because we felt that Nifty is at a resistance. And all this is possible because you are able to understand the market sentiment. You know that it may be a day play. So today we had day plays for a sell. And by the end of the day, we were quite careful in not carrying forward much of the trades. So the reason is that today's situation is quite different, and today's situation is a volatile scenario. Be it your macroeconomic numbers, be it your Q2, and there is a continuous state of news elements which are going to come in play. But is that going to stop you from participating in the market? Sure not. But then today, with positive macro numbers coming in, they say it's good for the economy. So where does it leave you with? Some people who are part of the WhatsApp group, or even scouting the Yahoo and Facebook and whatnot for free lunch. My friends, there is nothing as free lunch. So if you are scouting the internet for free advices, beware. Because tomorrow when you go into the market, this is what you will be. You will be wondering, what next? GST, expiry, and it goes on. Reasons are many, but the price is the truth. Like they say, justice is always there. In the same manner, truth is always there. So truth of the market is the price, and that truth is very well analyzed using technical analysis. And that's why I am here today to share with you how is it possible to analyze the markets consistently and find out opportunities. So if you divide the whole gamut of people who are there in the market jungle, so to speak, there are people who have money, but they do not want to participate in the market, and they don't have time. So they prefer to have it invested into mutual funds, or they give it to PMS guys. Then there are people who have knowledge, and they feel that they can do a good job of generating money from the market, and they are happy to participate on a regular basis, on the upside, on the downside, either case. And then there are people who have money and they need guidance. So what do they all do? They all want some kind of advisor, some kind of refined approach. And all these three types of people are satisfied by Chart Advice. And Chart Advice is a company which is mentored by a 40-year-old veteran. And Dr. Narayan has seen the entire depth of the market, and he has been able to generate a lot of opportunities for us to give out excellent service to all our subscribers, and we will ensure that our subscribers are able to benefit from the experience. We build a relationship with our subscribers because we feel that they need to be happy at the end of the day. Dr. Narayan has always told us, if the subscribers are happy, this office is open and you are there to service them the next day. It's like you getting up in the morning, and what do? You thank God for keeping you alive. So that's what I do every day. I thank God because He has given me the chance to see my near and dear ones every day. So that's how the market is. You need to be in the market. You need to ensure that you don't go out of capital. And that's what we do at Chart Advice. We advise our clients in the most efficient manner and ensure that they get complete value for money, be it our advisory, be it our training, be it any aspect. And why Chart Advice? Because you have complete value for money in our services. We have got fantastic tech support, and we have excellent support system where we ensure that you are able to address all your queries. Our team members are enabled to answer all the queries and give you a complete experiential feeling when you are interacting with us. Be it any of your doubts, be it any of your query, we will ensure that you get an answer which cannot be bettered by anyone else. That's the confidence which I have, and that is the confidence which is helping me to state this fact on a webinar. And I can proudly say that over the last 40 years, the kind of credibility which we have built, I'm very sure that you will find it in very, very few companies. The innovation is the foundation of excellence. This is one of the hallmarks of our company, and Chart Advice has gone way forward in this aspect. You can see here that our webinars can be seen on mobiles, can be seen on tablets, can be seen on desktop, can be seen on any device, and that's the advancement which we have made. And even at the end of the day, you need to be happy with your investment. I call it an investment because you are investing your time, you're investing your money, you are investing your effort to understand what these guys are saying. These guys are saying something in technical analysis. They are helping me generate some money. Do I understand it? And at the end of the understanding, whether I am able to make some money from it. If you're not able to make money from it, then you will not be there with me, right? So you are here because we are here rather because of you, and together we'll be able to build a very stable relationship, and that's why we ensure that we're able to strike a balance. Ultimately, at the end of the day, we want to create a relationship with our clients. Be it our free webinar, you are part of a free webinar, but I'm going to give you value, and I'm going to give you a lot of understanding about the market concepts. And then eventually at the end of the day, We will build a relationship so that we can carry forward this relationship in a much, much better manner. And that's why we have more than 150 clients who are able to understand that Chart Advice is a company who is not interested just to sell you a product. We are here to give you a better understanding. When you talk about understanding, take a look at this chart. This chart is of Lupin. And looking at this, it gives you a very confusing picture. First, it is trying to go up, and then suddenly it receives a scare, and then August last year it comes down, and then it's all sideways, and then what happens? It ends up coming down. So this pattern which you are seeing is not a very uncommon one. It keeps happening all the time. But then you need to realize that market is all about expressing your emotion. And when the emotions get expressed, they are coming out in three forms. You either buy, you either sell, or you hold. These are the three ways in which your emotions get expressed. And when your emotions get expressed in this manner, it is getting captured in the price. But then how will you understand what is to be done? For that, you need to focus on three important aspects of every trade. Every trade has these three elements. Be it those of you who are strict followers of fundamentals, you still have to have some point, like Dr. Narayan has taught us. Stop loss is the maximum pain point, a point beyond which you cannot hold on. You will have a technical stop loss. If you follow it regularly, you will definitely be able to participate the next day. But then if you have an emotional stop, then the answer is all yours. So when you're talking about a trade or when you're talking about an investment, entry, target, and stop are the three main critical elements. And to understand these three main critical elements, it is very important that your mind is able to perceive each aspect in isolation and then bring it together at the time of execution. Why I am making this statement is because when you're talking about your entry, you should see how you should be able to enter the trade. However, you should also have a view on the stop loss. Target is something which is in the future, but entry and stop loss are something which you can determine right at the start. So it is important for you to assess both these parameters right at the start. If you do not do that, then what happens is your trade becomes a little skewed, and then a floating trade always results in inconsistent profits, and eventually it will either take you out of the market or you will be in a much bigger trouble. So what are we trying to say here? We're trying to say here that price volatility is a very important aspect, and price volatility is going to exist. Like the chart of Lupin that you saw, price volatility is going to exist, and it will continue to probe our mindset. So the best thing is that we accept that volatility is going to be there and see how we can profit from it. And what exactly is volatility? Volatility is how the market sentiment is there at this point in time. So we have seen that the markets are right now in a very confused state. As of Friday, it was grinding at 9700, and then suddenly today morning there was no intention to go up, so you had a gap down, and then after that, towards the end of the day, it said that it's enough, and then it rallied a little bit, but still there were some kind of tensions which were, or rumors which were floating about the negative macroeconomic data. However, that did not happen, and now tomorrow we could see a rebound. So all these things are going to happen. Plus, in this week we also have the FOMC meeting that is going to be actually influencing the domestic mindset. So when all these things are in play, it is not going to be an easy task. So it's best that you get a tool which will be able to assist you in understanding the market volatility. So when you talk about market volatility, you have different, basically two phases of volatility. You can see here, this is the same chart of Lupin. This is the phase of high volatility. You can see here, volatility is high on the upside. This is coming swiftly to the downside. And here you can see that the volatility has shrunk. So it's in a range bound. And this is here, it has shrunk even further. And then suddenly it expands. So these kind of phases are going to occur. And how will you be able to handle such volatility unless you are empowered to know more about this subject? And that's why you need a structured solution to understand the markets in a much better manner. So for those who are new to the subject of technical analysis or want to know more, we have a comprehensive technical analysis webcast by Dr. Narayan, where various aspects of technical analysis are covered. You will be able to get lifetime access to this recording, where very beautifully Dr. Narayan has explained each nuances of the market. It is a 25-hour webinar where it's divided into these 8 components, where you get to know about Dow theory, candlesticks, the traditional patterns, the line studies, about Fibonacci, how to use them. Fibonacci is a very excellent tool where the mathematical relationship is converted for the price, and it is transported on the price and gives you very, very nice support resistance levels. And then there are concept of moving averages discussed. Then there are concepts of oscillators which have been discussed, and then how to put all the analysis together so that you're able to generate powerful trades. Well, now taking our discussion forward, you can see here that Bollinger Bands is the tool which I'm referring to. And this tool is a very, very fantastic tool on how to address the market volatility. Way back in 1980, John Bollinger found out that markets are changing. The concept of the market movement is changing, and it is becoming very difficult for the prices to adhere to the price movement or the technical analysis tools by itself. So, and then suddenly he started finding out that there are flares which happen. So he started investigating into it and developed this tool which is based on the standard deviation. So the backbone of Bollinger Band is a moving average, a 20 period SMA. So normally, for those who are aware of the statistical measures, around 98% of the data set is covered in the 2% standard deviation. So that's why he used a 2% standard deviation which is applied on the moving average to create a band. So he created a upper band which is 2% plus the standard deviation, 2% standard deviation on the moving average, and a band on the lower side which is again a 2% standard deviation from the moving average. So what happened was, you had something like this. You can see here that the same chart of Lupin, and 2% standard deviation is able to encapsulate most of the price move. And whenever the bands widen, you could see a sharp rise or a sharp fall. In this case, you are witnessing a sharp fall. You can see here the prices are contained, and then when the volatility expands, you are in the trade. You need to be in the train when the train is moving or about to start. You cannot jump inside a running train. So it helps you avoid such foolish decisions like buying at the top or entering at the bottom. Instead, you can ride or you can jump inside a train when it is about to start. Isn't that an exciting feeling? Ride all the way to the downside and make profits. But then you need to be alert about such opportunities. And this is what I'll be covering in some time and show you how you can capture such opportunities using a scanner. So what are the components of the Bollinger Band? And how exactly will you be able to find out? So the first aspect which you need to address as part of the Bollinger Band is called as the Bollinger Band squeeze. And by the term squeeze, one can understand that squeeze refers to a portion on the chart where the prices movement is getting dissipated, or absolutely there is no movement at all. So the shrinkage happens because the price is not willing to go up or down, and that's an opportunity for you waiting to be encashed. So when you look at high beta stocks entering into a squeeze, you can get ready because it is a time for you to act, and you need to follow the direction of the band. You should not have any preconceived notion because you will lose the opportunity, and the opportunity in Bollinger Band doesn't last for very long. I will show you an example. There are rare cases where the opportunity has continued far ahead, but then we are looking for opportunities which come frequently, and in Bollinger Band the opportunities do come frequently, but then they do not last for long. So you should be ready, and this is what we'll be addressing in the future slides. You can see here that the prices were range bound, and this is part of the squeeze. I will show you the same chart in few minutes, and you will understand. You can see here that this is a squeeze where prices lost interest after a high volatile phase. So you need to divide your chart into a volatile phase and high volatile phase and a low volatile phase. So these kind of divisions are necessary for you to anticipate the movement. Market is all about anticipating. That's why they say that market is an art. And that's why we have that webinar, which is called as Art of Trading series. And it is not mentioned as the concept or the method. It is an art. Because what you see is what you perceive, and what you perceive is what you react. That's how the market goes. So coming back to the squeeze, you can see here that this particular chart has got lost within the band. Wondering what should we do now? It's like an Alice in Wonderland. And then what you need to do is understand how to take benefit from this phase where the prices are entering into a squeeze. And that can happen when you have the concept of walking the band very clear. And what do you mean by walking the band? Walking the band means that when prices are tagging or latching on to a particular side of the band, that's where the prices are expected to move. You can see here that the same chart, the prices after being in a squeeze, they started tagging the band. And once they start tagging the band, it's very easy for you to participate. You can latch on to this, and then you can invest in this stock, or you can trade in this stock, and then keep your stop loss below the moving average band. So here you can see that the moving average, which is as I said earlier, is the backbone. So if the moving average is flat, that means that absolutely there is no interest for the price to go anywhere. But then once the moving average begins to curve to the upside, then there is an inclination for the bullish bias to hold on. If there is an inclination for the bullish bias to hold on, then one definitely knows that they should be going long. So the clue is that put on a Bollinger Band, see the direction of the move. If it is in a squeeze, stay away. If it is in this particular form and beginning of a move, then take action. If it is too late into this move, avoid it, come back another day. Market is like a station where trains keep coming and trains keep going. It's better to get in from the start of the train. Few of us who are there in Bombay or from Bombay, they'll know how difficult it is to board a train from the middle. We always get squashed, or probably you may not even get an entry. So that's how it is. Let's see how the investors play the Bollinger Band. You can see here this chart of ABB, and when you're looking at ABB, you can see this particular spot enters into a squeeze, and then there is a flare. And after this day, there has been a continuous attempt to only go higher. There has been a dip, but not much of action. And then it enters into a sideways phase, and then it tears off. So Bollinger Band helps you spot such opportunities and helps you trade this on a much better manner. Now, if you look at the next chart, this chart of Biocon. Biocon was having a lull phase for more than a year, but then in March 2016, it said that trends are changing. There is a shift, and you can see here for almost 1.5 year range got broken, and since then the price has been on a steady trajectory upward, and even a pullback to this mid band did not find any selling pressure. It just hung on, and then again it has started off. So a rise from 450 to 1200, so almost a 3x move, and all this was possible if you had seen the Biocon chart on a Bollinger Band time frame, a weekly time frame. This again, I spoke to you about Max Financial. You can see here there's a Max Financial monthly from 120 to 600, a 5x move. And all this is possible because your concept of Bollinger Band is clear. If your concept of Bollinger Band is clear, it will help you achieve such results from your investments. You can see here that if you had a monthly close and then waited for the month to complete, you never had a closing below the mid band. And this is how you are able to participate in a much better manner in a Bollinger Band setup. It's pretty simple, but then what is simple needs belief and eventually implementation. You can see here there is a chart of Gillette. After a high volatile phase, almost the entire year it has spent in a lull, and then after this day you can see it had a the results were out, and then it had a fantastic gap up opening for almost in 10%, and Bollinger Band had already given a clue. So you can see here this is a walking the band and the squeeze which happened, which eventually led to a sharp rise. This chart of India Bulls Venture, you can see that the India Bulls chart is a rare example. After lying low for such a long time, few would have given it a chance. But then if you use tools like Bollinger Band, you're always ready. And if you are able to spot it, so how will you spot it? You'll spot it using certain scanners, or you'll using some kind of filters where you would have got some news from someone about India Bulls. You'll put on the chart, and still it was still worth it, because you can see here that the Bollinger Band continues to be the mid band continues to be far away, and it will help you to participate in the market on a regular basis. See, here there's a squeeze. This is walking the band. The chart of Tata Motors. Again, after a range bound action, it is able to give you a signal of walking the band. So walking the band is very critical aspect to be followed after the squeeze. Otherwise, you need to ignore the trade. Any questions so far? Any particular questions which I can answer on this? It's pretty simple, but still. All right. Moving on to intraday trading. Intraday trading is something which many of us are engaging in, and we all need some fast utility. Okay. You're asking me to repeat about Tata Motors. This is a chart of Tata Motors, where you can see here that here the prices are, there could be a better, this is not a squeeze, but this is a squeeze. Here it's too wide, but here it has narrowed. And if prices are not tagging the Bollinger Band, then it is better not to participate in the stock. You need follow through. Everything in market is based on follow through. I saw opportunity yesterday, but then it needs a follow through. Like if I am going long, if I find that the signal is giving me a setup, it is a buy above 477. If it happens, then I go long. Else, I ignore it. The people who jump at opportunity because it is existing or under formation, then you will always end up making mistakes. Is it clear, sir? Okay. There's a question asking how to measure volatility. Volatility is based on standard deviation, and volatility is a feature of statistical nature. So if you want to measure volatility, then Bollinger Band is the best tool, because it helps you understand the concept of volatility and also helps you spot opportunity. Is it clear? Okay, we'll proceed. Things will get much clearer. These are charts for the intraday place. You can see here that even on the intraday time frame, you are able to generate opportunities in a similar manner. If you reduce the time frame, the volatility will be much more because the time frame is reduced. So on a 30-minute chart, you can see more gyrations, and these gyrations are what which help a trader or ideally a trader to participate in the market. You can see here that the squeeze happens and then you get a break. So smaller the time frame, more the squeeze, and more the squeeze, more the opportunity. You can see again a squeeze, a run. Once you get the run, you know where to set your stop loss, and you can continuously be participating at every pullback to stop loss and reviving. Again, this is a chart of looping, but on a lower time frame. And then you can see here that the prices have been in this in a narrow range, and then finally the 1400 to 1100 drop, it gave a first sign, it gave a 50-point drop, and then it took a lull, and then again there was a drop. So you can see here that Bollinger Band continuously gives you opportunity. My friend, there is a query for taking a chart, an alternative chart, but that is not possible now because it will delay the whole webinar. I will take it after I complete it at the end of the session. You can see here that this again is showing you a chart of HDFC Bank, and then how the prices are oscillating within the Bollinger Band. And the reason is that the moving average starts getting flat. So when the moving average starts getting flat, the prices stop moving. It is like a riverbed when still water runs deep. So this is similar. So you can see here that when the Bollinger Band mid bands starts flattening, then prices starts to rest. So you need to see where the mid bands are resting, so that you will get an opportunity to participate. You can see here again, it was oscillation, that mid band. Smaller the squeeze, better is the result. Smaller the squeeze, better the result. You can see here, smaller squeeze, better result. Again here, there was not much of squeeze happening. But then you can see here, smaller the squeeze, better result. This is a chart of Voltas. So you can see here that markets are giving opportunities time and again, because market is a sea of opportunity, and there is no better place than market to give you continuous opportunity at every point. You can use various sets of tools, and what I'm showing you here is one of the tools which has been discussed as part of the webinar. So I am sharing with you an important concept which has been discussed in the webinar, with you because I feel that one should know some valuable tool to operate. And like I've always said that our participants who are coming down and spending their precious time with us, we always ensure that they're able to generate some value. And that's why I have shown you a very important tool called Bollinger Band, and I have also shown you how you can use this tool in a much better manner.